What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 9th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and today we've got a wide range of different topics to talk about, from covering my recent acquisition of more Bitcoin and how I've adjusted my trading strategy in this bull market, and along with that, talking about the rat race between central banks and corporations to make their own cryptocurrency and how that's going to be a beneficial factor for the overall space of cryptocurrencies in the sense of awareness, and last but not least, talking about traditional equities. So we've got lots to discuss. Let's not push it off any longer right after our quick sponsor. Our sponsor for this episode is Shrimpy. Shrimpy is a free application that crypto investors use to manage their portfolio. Starting off on the dashboard, you can see a graph of your portfolio value and each asset in your portfolio. Since you can link over 15 different exchanges to a single Shrimpy account, you can keep a complete overview on your entire portfolio. It's easy to trade on Shrimpy. Just select the assets you want in your portfolio and Shrimpy will buy and sell them for you. Setting up a rebalance period will make the process automatic. Besides creating your own portfolio, you can also copy portfolios from other users in the application. If you like the leader enough, you can follow them to get real-time updates from their portfolio. Check them out by clicking the link in the description. Alrighty, everyone. So let's go ahead and take a look over cryptocurrency markets. As we've been seeing, guys, over the last few months, this is no surprise. Crypto markets are continuing to go on a tear. More specifically, Bitcoin here in the sense of scale. Bitcoin has continued to dominate markets with very few altcoins actually outpacing Bitcoin. You've got a few exceptions here like Quant, for example. I know we've got a lot of Quant fans out there. Siacoin as well, doing quite well. And we can see here that even though some altcoins may be neutral, maybe a little bit in the green, most are not keeping up. And we're seeing some of the overextended players, for example, like Energy and Chainlink, starting to decline a little bit, starting to take a little bit of a correction here. But I, again, am looking at some of these altcoins that have been performing quite well in a Bitcoin bull market in order to possibly add during the altcoin cycle. Again, trying to find ones that aren't too overextended. And we have talked about some of those players. BAT was one of those that I had mentioned beforehand. Now, as we take a look here at the last bit of quarterly performance, we can see that we're getting very close, guys. As this trend starts to really pick up, we're getting very close to revisiting our recent relative highs here at 373 billion. Right now, we're sitting at a printed figure around 346 billion. So only a few $10 billion away. And if Bitcoin really presses up towards 13,800 per Bitcoin, we're going to get up to that valuation very easily. And I think that there is a good chance that over the next few days, if we don't see a serious pullback on today's price or over the next 48 hours, that's probably what I would give or take. I think that we're going to be pressing up even faster than I think a lot of us anticipate, and we'll revisit back towards the highs and possibly break up to new levels, continuing the trend towards 20,000. I would like to see it correct as much as the next guy, but I have to say, guys, the momentum in this market is showing that there is a supply glut, or excuse me, not a supply glut, quite the opposite. There's a relatively small amount of supply available in the market, and there's a huge ramp up in demand here, especially as all the macro factors are coming into play, guys. We know we've been talking about this stuff. We've analyzed it on a daily basis, and it's definitely becoming something that I think a lot of people are getting interested in. And as we can see here as well, Bitcoin dominance pressing towards 64%, setting a new relative high for a pretty foreseeable amount of time here, guys. I think the last time we printed this high was back towards the late part of 2017. I mean, we're even higher than some of these levels. Then again, I guess we have to break it down to the smaller time frame. Let's see if we printed a higher figure. Okay, so we're close to the highs here on December 7th of 2017, and I think we'll keep pressing up here until we get towards 20,000. Might even set even a higher level, and then finally we might be able to see some relief in altcoins. Again, I have no doubt, guys, there will be some speculation in altcoins, but do not doubt the reality that a lot of the 98 to 99% declined altcoins, they're probably not coming back. And I know that's really painful to say, but there's a lot of projects, guys, that even though you might be emotionally attached to them, you might like the brand or what it stands for. This is a world of investing. You cannot get emotionally attached to things. And just like the dot-com bubble, a lot of the great tech companies that people invested in, they disappear, okay? The biggest trap you can get in is the psychological trap of not being able to let go of investments. All right, so that's just something I just wanted to emphasize. Look for strong players. Look for ones that have pushed sideways over the bear market comparative to Bitcoin, and maybe had some nice volatile spikes where it ran and showed that it has momentum. Again, there's a few altcoins that really showcase that during the bear market that had a lot of nice rallies comparative to Bitcoin. That's what I'm looking for. All right, so I've rambled on enough about that, guys. Hope you can take away from that lesson. Hope we can take something away from that lesson. I want to spend some time to focus in here on Bitcoin. Now, Here's the thing. As you all know, I averaged in, I think the official price was around like 10,180 or 10,150 or something. That was kind of the range I was trying to get it, because I just heard actually from my brother that it hit down to 10,000. So I knew I wanted to average in. That was going to be my first entry point. And thank God I did, because I'm already 20% on that position that I built. And if I would have waited around, oh no, I want to get it at 9,500 or I want to get it at 9,000, I would have missed out on that, right? If I was getting greedy and expecting the 35 to 40% correction. And I'm not going to ramble on a lot, guys. I'm going to get straight to the point here. In this market, I not only recommend, okay, I can't financially recommend anything to you guys. Again, it's not financial advice. It's just my opinion. But I will tell you all, if you want to understand my mindset as to how I'm approaching this market, I'll go ahead and demonstrate it. I'm not waiting for the 35 to 40% corrections. Okay. Everyone is, I think every time, Bitcoin has been correcting, I think everyone's been anticipating that. And until we exit out of 20,000, I'm not going to be waiting for 35 to 40% corrections. I'm going to be waiting for 25 to 30%. I'm going to be a little less greedy than the other guys. And this is a huge lesson that I've talked about, guys, in previous videos. Now, I'll be fair. I wasn't really, applying that so much in the case of the earlier corrections, because I thought, when we got to 6K, I thought, this is, pretty steady support that we used to have, which is going to probably serve as resistance. And I thought, okay, we've got some time for this to pull back. No, it broke right through. And then it came up here as well. I was like, okay, we went up to 9,000, previous resistance point over here, around this range. Well, we had, for example, around the upper $8,000 range, we've overextended past it. Maybe we need to come back and make support in 6,000. We didn't get even a 30% correction. Again, we continued higher here and pressed up towards much higher levels. So you have to adjust your strategy to how the market is moving. You have to understand that other traders, you can either be in the basket of traders who are waiting for the 35, 40% corrections and are never getting to average in, and instead of getting at a lower price down here and just riding the wave, they're missing out and they're going to buy it much higher. That's going to be some of the buy side pressure up here, is people who are FOMOing in and stuff and buying once it's revisiting its all-time highs. You want to buy whenever the market is giving you a dip or a correction opportunity. Again, you got to determine for yourself if you really want to invest in Bitcoin, guys. I'm not meaning that in the sense of like you have to buy it, but as someone who is bullish on Bitcoin and is bullish on the greater trend and thinks it's going to 60 to 70,000, that's when I average in. I'm averaging in when there's dips and corrections, especially at big even levels like that, again, 10,000. Resistance level over here, made support, not to mention it's just a very big psychological big even level. And we all know that when Bitcoin was at 10,000, right, we had a very short period of time. I don't think it's obviously not as short as how it was over here, but I think that you're going to see a pretty quick rally back up to 20K here, as we've already seen the market has shown very prominent momentum. All right. So again, I rambled on about that. I want to go ahead and take a look here at some of the altcoins, just as people have requested I take a look at them. I know I don't do as much as of recent. It's just that, we're not in an altcoin cycle yet. Ethereum, again, one of the few players that I actually feel would be really interesting to watch. The reason I say that is because of the DeFi movement. There is a lot of interesting Ethereum applications that are setting demand for the Ethereum token. It's not just ICOs, it's not IEOs. In that case, it's usually exchange tokens that are getting that demand. I think finally we're seeing a maturity of Ethereum. This decline here really proves to it, and the fact that we broke out of the ascending triangle here, have been setting higher lows here, higher highs. This is a really good sign to see. It's a sign of maturity. It shows us that altcoins, at least the ones that are maturing and actually have real developments on top of them, are definitely bringing some attraction to investors, so long as their USD is holding steady or slightly increasing alongside Bitcoin, maybe at a slower rate. I like Ethereum. This is definitely what I'm going to be watching, because I'm going to be looking for a lot more 3 to 5xers rather than plays that are doing 50 to 100x's. You're just not going to get a lot of those in this market, guys. Xrp Usd, this is one that people have asked me to talk about as well. I do like how Xrp, and this is again a confident sign that we are getting more resilience in altcoins, is that we've basically established a line of support here on previous resistance. You can see we had resistance here, resistance here, resistance here. And again, we're making this level that we had in the past support, right? So sorry, I don't know why my line wasn't extended all the way, but this is the main level that I'm watching. If XRP continues to hold here, and its Bitcoin comparative gets really cheap, again, we are getting to some pretty low levels here. Again, I'll pull it up here on Bittrex. Again, breaking down, I think we're going to get something down either at this previous support range here in April of 2017 or something down here, worst case scenario, if we start to really get a flush on altcoins going to Bitcoin 20K. But either way, in that kind of range, that's when you want to look to not get bearish. You want to get bullish, right? So again, I don't have any specific levels as of yet. I don't know if XRP is going to do too well with a lot of competition like Libra and other central bank or, commercial bank digital currencies like JP Morgan coin or Goldman Sachs coin. So again, on a just pure speculative play, I think there could be some room. All right, so one last thing I wanted to take a look at here was Litecoin, and I actually want to take a look at the Bitcoin comparative here. So we can see that most of the gains for Litecoin here very similar, and we talked about this actually. I don't know if a lot of you get to see it. We did a video a while ago talking about the Litecoin halvening, and we talked about how as it went into the halvening, you actually saw basically a continuation to the downside and a correction in Litecoin, shedding off a lot of the gains in regards to what people were expecting. People expected higher demand here for Litecoin as it went into the halvening, and we actually ended up seeing a correction. So as much as it might be doing all right in its USD comparative, as we can see here, Litecoin is steadily corrected here in the sense of its Bitcoin comparative. We're setting lower highs and lower lows, and I think that we're going to be revisiting back towards 700,000 Satoshis around there. I'd be happy to consider picking up some Litecoin. I think that it is going to be one of the more long-term cryptocurrencies, and I think if we get that correction, that's going to keep us around anywhere from this $110 range down here to 100, which I think will be a nice range of support here. A nice big even level, not to mention as well, we held support on it back here. It was resistance 2 times in the past. Again, very significant, big even level. $100 would be where I'd be comfortable with Litecoin. All right, so we've looked enough at price right now, guys. If you guys want, feel free to leave a comment down below, and if you already see one down there about it, leave a like on it. If you guys want me to do a really in-depth scan of the market and review some different altcoin prices, let me know. I've seen a few people doing that, and I'd love to do that if you guys are interested, and I can provide. You guys know I keep a very simple analysis on things. I don't try to overcomplicate it. I look at price levels, support and resistance, and I look more for corrective periods to buy in. So I'd be happy to do that if you guys would like. All right, so to take a quick look at our sponsor CoinMarketCal to see what's going on in the crypto space, we have a few key things that are going on here. The first thing here that I wanted to mention is that there's not only a new website launch for ARK, but along with that as well, the mainnet launch for Anchor Network, which some people have been looking forward to. The Waves platform, which has been around for a very long time in the crypto space, is finally going to release availability for dApps. So this is really exciting as well. I'm excited to see more protocols expand for dApps, and I want to find if we're going to get the killer dApp. I think a lot of them have to do with financial applications. I think that was it for the second page here. For the third page, there's a few big things. For example, there's the Node 1 release of Waves, also a mainnet upgrade for ARK, which I'm excited about. ARK has a lot of interesting team members, again, on the core team building the blockchain for ARK. And then along with that, the Sigma launch for Zcoin. I'm very interested in this. I like all the developments going on in privacy coins. This is going to be replacing the Zerocoin protocol, basically behind Zcoin in this case. So Zcoin will launch their new privacy protocol, Sigma, which replaces Zerocoin. That's why it's called Zcoin. But I'm interested to see how this is going to differ in a technological perspective. Alrighty. So let's go ahead and talk about some of the things that are going on in the market right now, guys. Just wanted to mention this in regards to, a lot of people have been talking, you might have seen it on crypto Twitter and other places across the crypto sphere, how there was a photo of 2 gentlemen walking across in one of the headquarters for Deutsche Bank, or one of the offices for Deutsche Bank, and one of them had a Bitcoin bag, and many people thought that this was a fired employee from Deutsche Bank, and how he was heading out of the building with that Bitcoin bag. And again, people are transitioning from their interest in traditional markets and traditional banking into crypto, but in reality that's actually not the story for it. I thought it'd be funny just to understand what actually was the story behind it. So basically, if you want to understand what was going on here, it was actually 2 gentlemen that were walking, and actually one one of them was a tailor in this case for an employee at Deutsche Bank. So they're basically tailors, who are fixing suits, and one of them happened to have a bag with Bitcoin. And as they were starting to walk out, they just actually tailored a suit for someone in Deutsche Bank. They had just walked out, and photographers had saw them. The position was perfect, and they started taking photos outside of it with them holding the Bitcoin bag. And I love this quote here. After around 100 shutters later, someone's just rapidly taking photos of the camera. He said, and turned to his friend, his colleague, he said, "You think we'll make the news?" ? And boy, did they make the news. I don't know if they're going to show. I don't think they really showed the photo here in the article, but if you look up Deutsche Bank, employees, Bitcoin bag, you'll see it's going around like wildfire. But either way, I don't even care. It's just so perfectly timed. I'm so happy the photographer got it, because to be fair, I really think that will be a photo used in textbooks, because eventually people in the banking sector, people in finance will get involved in cryptocurrencies who have been skeptics. I think you're going to see more and more layoffs in the financial sector. It's becoming more heavily automated, not to mention as well, banks, when they can't seem to make profitability, are obviously going to reduce employees that they find to be unnecessary. They're deemed unworthy in a case for the company. And again, that's a normal part of capitalism, but at the same time, I think this is going to turn a lot of heads towards cryptocurrency. There's a lot of room out here for you guys to join us. If you can, add something unique, to the space and stuff, we're welcome to have you on board to learn about cryptocurrencies. And again, hopefully have a change of pace as to how you view what money is, and the importance of having sovereignty over your money, and possibly not putting that in the trust of a central bank. Either way, or a commercial bank as well. In the case of Deutsche Bank, we see that Deutsche Bank is down another 3% pre-market after already dipping 6% yesterday, closing down on a lot of the gains that it had over the last month. And I think this is obviously going towards a retest of the lows, guys. With this cut, I think it's going to push this back down to 675 for Deutsche Bank. And if we break below there, as I put actually a retweet out on for the founder of Real Vision, he mentioned how a lot of the banks, not just Deutsche Bank, this isn't an anomaly, are testing some serious support levels. And if they break those, you're going to get some serious FOMO into, I think, hedges like gold, hedges like Bitcoin and other cryptocurrencies. You're going to see a lot of capital flow across different markets. It's going to be very interesting. Now, let's go ahead and talk about this war, or this rat race to create the next central cryptocurrency, or at least they call it a cryptocurrency. The next central bank cryptocurrency that is supposed to be unveiled is one by China. So in China, there has been an announcement that you can see on ChinaDaily.com, that the Chinese central bank, the People's Bank of China, has talked about creating a new cryptocurrency. At least they're calling it a cryptocurrency. I'll stop calling it a cryptocurrency. It basically is, as with most things, it's a digital accounting system that they're hoping to create that would have some central control by the Chinese government. And again, this is all coming out of the recent FOMO that governments, other corporations, as well as, in the case of the Chinese government, this general FOMO of what's recently happened with Facebook. They see that corporations are getting back in the trend they used to have in the 1900s of creating their own currencies. And we are not going to live in a world of central, currencies to individual nations in every single case. It might be that people opt in for splitting off into other digital currencies from companies and, different types of entities, and even though, for example, like in the Libra, it's backed by a variety of different types of currencies, as well as treasury notes, very secure kind of assets that give it the stability. You're going to have all kinds of different approaches, guys. It's going to be incredible to see what happens here. I'll be quite frank, I think a lot of it's going to be a failure, because I believe it's inevitably going to be just a great thing for cryptocurrencies and getting people used to using mobile payments and using QR codes, and being used to the idea of having some ownership of your own money. And when people realize they get censored out of it, I think they're going to rally right over to Bitcoin and Ethereum, and they're going to opt in to generate stable coins. It's all going to be very simple. But again, this is basically the main quote here. "We will keep a close eye on the new global digital currency," said Wang, making the latest comment on Libra from the country's monetary authorities. So they're keeping an eye on what's going on at Facebook and other I guess, it's not proper to call it a Facebook coin. Calibra and, the Libra project and everything. They're keeping a close eye on this, and they're going to make sure they keep up with it, because China specifically already has a mobile payments market, and they're going to make sure that WeChat and Alipay and their corporate entities that they're very close with are going to have dominance over at least their own market. if not different parts of the world if they can get to it. Anyways, very exciting case, guys. I'd like to know what you all think about a China cryptocurrency. Maybe you don't see it as a cryptocurrency. And the other thing as well that I wanted to talk about is in this message of governments waking up. You know, this is not just a case in China. Brazil, for example, requires new diplomats to know about blockchain and crypto. So they actually have 2 new basic courses in the Diplomatic Academy. So the Brazilian Diplomatic Academy, the Rio Branco Institute will now require that candidates have knowledge of cryptocurrencies and blockchain, Cointelegraph Brazil reported on July 8th. The Rio Branco Institute, established in 1945 and offering 2 advancement courses for diplomats, has published the 2019 edict for the selection of new diplomats in Brazil, where it included the requirement that candidates know about blockchain and digital currencies. Along with this as well, in India, they're now educating high-ranking police officers on cryptocurrency. Now, this is for another reason, I think. In Brazil, it's more about understanding how to do it on a legislative basis. But now in India, they're doing it on a criminal basis, I would assume, because they're trying to crack down on cryptocurrencies. India and its people have a very large distrust for the government. And that's why cryptocurrencies have become mainstream. They don't like the government getting involved too much in their finances, especially with a lot of the problems that they've had. I've had a lot of people I've met in India who've talked about this general trend of just distrusting the government, the push for a cashless society. And again, no matter what the reason is for, guys, this shows that the market is maturing. It shows that it is something that people cannot ignore, which I think is very fascinating. I think this is something that we should continue to understand and, again, accept it as a good sign overall that, as much as they'll try, at least they're showing that there is some value to this market. So I'm very excited about that. And again, I think they'll have a piss poor chance at trying to stop whatever they're trying to stop, because cryptocurrencies, just like the internet, it provides the opportunity to use it how you'd like and, to exchange whatever value you'd like to exchange. And I don't think that's criminal activity. I think that in most cases, it's really just going to be people having financial sovereignty, being able to get access to financial services, things of that sort. All right. So I've rambled on enough about crypto. I'd like to know what you guys think about all the things we talked about. But one last thing I wanted to talk about is equity markets. And I just noticed this morning, as futures are still trading down, they've rallied back up a little bit here. It's only down about 0.2% here at max, depending on what index you're looking at. We can see here that on the Qs, the NASDAQ ETF, we can see it's already printed on the chart. And it seems like we've got a very clear line of resistance here with the previous highs. So I'm very interested to see what happens at this next FOMC meeting that's coming up here, I think in the next week and a half. And, when we consider, what the Fed's going to talk about, we need to talk about what the market's priced in. Now, there's no way to tell exactly what the market is priced in. But I will say, if you take a look at some of the CME measurements, for example, people make kind of bets and estimates on what's going to happen over the next few months in regards to Fed rate cuts or rate increases, and also what they'll probably do to the balance sheet. In the sense of rate cuts, most people have come to the conclusion that we're going to get 3 to 4 rate cuts by 2020. So that means that we're generally going to be shifting the trend here. We've officially gone into quantitative easing in a sense in regards to interest rates at least. And I have no doubt that we're going to start adding more things to the balance sheet now that the Fed has cut back a little bit. It's going to reverse its trend most likely. And I have a feeling that because there's not as many toxic assets out there on the market that need to be picked up, obviously some of the things they sold off, the mortgage-backed securities, things that sort of out there, they may buy that back up, but I really don't think they're going to do that this time around. I think they're going to buy up equities. I think they're going to buy up stocks to apply continuous pressure to continue the expansion. It's exactly what Bank of Japan has done. And who's to say that the United States and the Eurozone can't do the exact same thing? It's the final, kind of inflation mechanism we have to prop up the bubble, and then eventually it'll pop. Because you can only keep the facade going for so long. And we're seeing, the weakness of European banks right now. I mean, it's ironic too, because you would think a bank would make more money in a basically a low interest rate environment, because if it's a low interest rate environment, they can basically pay their savers nothing, as they've been doing for the last decade, and they can just lend it out on credit for 10, 20, 30%, whatever shitty interest rate that people have gotten used to paying. Sorry for my language, but it's predatory. It's not right. And you can obviously see it with the crypto lending platforms, guys. There is much higher interest rates being paid out to those who are giving up their crypto, getting somewhere between 6 to 8%, like a bank used to pay. and they're charging much better interest rates, and they're cutting their margins in the middle, which is exactly what should be happening in the banking environment. However, we don't have serious banking competition. We don't have awareness of just how much people are getting screwed over, right? And again, getting to my major point here about the European Central Bank, if it continues to worsen in the the Eurozone in this case, in regards to the banks there, this will spawn a domino effect, and this will have a weighing effect on confidence levels in other economies. The Eurozone's already entering into a mild recession. If they can't even escape recession territory and get real economic growth when interest rates are this low, when we've done this much quantitative easing, I mean, guys, this is seriously concerning. And it's exactly why I'm optimistic on Bitcoin. I think there's a lot of potential here, guys. Again, I know it seems very expensive, but Bitcoin's only at a $220 billion valuation, right? Even if we're just going for the $1 trillion mark, we've still got, a ways to go here. It's 4x from here, more than 4x actually. So, that's going to be really exciting. I can't wait to see those times, 50, 60, 70K Bitcoin. I think it's a very reasonable target. And if we continue to get the situation growing that we have in the macro picture right now, I have no doubt that Bitcoin will get there soon enough. So again, that's why I'm averaging in. I'm being less greedy than others. I'm getting my positions while I can. And even though I do believe there will be some altcoins that move, I believe Bitcoin will be the overall leader in this market. And of course, there will be some that move more percentage-wise, but in the sense of scale and the sense of real impact that's noticeable, Bitcoin is going to blow everything out of the water. I really do believe it, guys. There's nothing as exciting as this right now. All right, I've rambled on, guys. I'm getting caught in a tangent. I hope you all are having a great Tuesday wherever you are, guys. Thank you all so much for watching, as always. And if you guys have anything to say, please leave a comment down below. If you guys would like to support the channel as well, there's plenty of links down below. Check out today's sponsor, other links as well to help support the channel. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.